Hi, this is Dan Johnson from StockKid, which you can find at stockkid.reasonriseparadise.com. And this is a video for my YouTube channel, youtube.com/thestockKid. And the other day I talked about my portfolio and what it was. And today I bought a new stock for my portfolio. And again, this is this isn't a real portfolio. This is a portfolio on UpDown, which you get $1 million in money to play with, but it doesn't actually make you real money. But, you know, of course, I'm treating this just as seriously as I would, you know, if it was a real portfolio, because I know that people are going to take my advice. And, you know, so certainly, you know, just because it's a free portfolio doesn't mean I'm just going to be messing around by any means. I actually had gotten a really high account with a really high return on UpDown, and someone managed to hack it. So I'm rebuilding my portfolio and starting a new account. And so today the new stock I bought is called Infinera. I don't know if I'm pronouncing that right, but INFN. That's the stock ticker. And let me talk to you a little about that and give you a brief overview of why I purchased this stock. Well, the reason, really, is because stock, well, let me first tell you what it does. So what Infinera does is it's a company that helps with downloading more files and high-speed internet. It does 10 gigabytes per second, and soon it's going to be upgrading to 40 gigabytes per second. And the reason it can get those speeds is because it is mixing up all the downloads. Instead of going through one pipe, through multiple smaller pipes, which make the connection faster, and you get a lot more bandwidth with that. And you know, most of us are, you know, hogging a ton of data, and I know I'm often held back by my internet speed and bandwidth all the time. But the bandwidth and speed that this provides is amazing. Now, a lot of the carriers, like Verizon, AT&T, and a lot of, you know, internet companies are starting to buy this because it's the industry leader. It's above all those other companies that provide this type of technology. And when you're the industry leader, you know, it's a lot easier to make money. Now, Infinera's stock has gotten hit a little lately. In fact, let me go to MSNBC to show you about this. See, so this is their income statement, and as you can tell, they're actually losing money in their net income at this point. But if you look at the trend, in 2008, before the crash, they were up 78 million, and you know, now they're down 27 million in last year's net income, but you know, it's doing a lot better than before. They're really rebounding. You know, they're certainly, as you can tell, I mean, 86 million, negative 86 million to negative 27 million. That's a really you know, great jump. As you can see, they're also making a lot more revenue now. Of course, they're now they have a positive gross profit, and it's the highest since 2008, and almost rivaling 2008. They'll probably easily break that this year. You know, their operating income, they're losing money from a lot of these different expenses, and that's where they're losing all this money. But in the future, I think they can minimize that, and they have been minimizing it. You know, that will hold a lot of people back, but I really don't think it's going to continue, because with the economy coming back up, and you know, as you can see, they're just doing a lot better. And let me go to the interim for the last few quarters. As you can see, net income has been going up compared to last year, Q4, negative 18 million to negative 2.74 million. And in quarter 3, they were actually profitable. So I think they're really about to be making positive money, and when that happens, the stock's just going to shoot up. Let's go to the balance sheet. They've got a great balance sheet. They have 551 million in total assets. Total current liabilities 120 million, excluding the stocks, which unless the stock really gets hit, that's not really a problem. So I don't really count that. But really, they don't have. They have just a great ratio of assets to liabilities here, and just a great balance sheet. And their balance sheet is continuing to get better and better. Yes, their liabilities are increasing a little, but their assets are increasing even more, as you can see. So let's go to the cash flow. And the cash flow, finally, in 2010, they got another net change in cash, which it was a pretty good feat since they got negative net income, especially considering that the year before they had gotten a negative 56, almost 57. So they're certainly rebounding from the crash. That certainly hit them pretty hard, but nothing like that's going to happen for a while. I do think the economy is going to go down in 2012 as a whole, but with technology, I don't think it's going to hurt the tech that much, and at the same time, I don't think it's going to be nearly as bad as it was then. Even though the crash might be in some ways worse, I think that people were just completely unprepared before, and now, as I said, they have a strong balance sheet to handle that. And as you can see, they're returning to profitability here. Let's go to quarter by quarter for this. And as you can see, quarter 4 was the only quarter that they were profitable for that. So they're certainly going up a lot with that. So as you can see, their cash flow is increasing. They have a solid balance sheet. Their income statement, their net income is getting better. It's getting better over the years. It's gotten worse, as I said, since 2008, but that's because of the crash, of course. I really think Infinera is a solid stock. I would estimate that since it's the best technology in the business and the bandwidth is just going to keep increasing and people are going to want more speeds, people are going to need, really, in the near future, people are going to need more bandwidth, need more speeds. And I think a lot of companies are going to turn to Infinera because they have the best technology in the business. So, my estimate would be that in the next 3 years, the stock is from anywhere from $12 to $23 per share. I would guess it's closer to 17 to 20. 12 would be if they didn't get any big signings, but I think that in the very near future, as I said, they're going to get on with some more tier 2 and even tier 1 companies. If they get a contract with a tier 1 company, the stock is just going to explode. I think the highest they have right now is tier 3 companies, and so even if they can get tier 2 companies, it's just going to be awesome for the company. So I think Infinera is just a really good stock. As I said, I recommend investing in it, especially at this low price of $7.83. So I hope you enjoyed watching this video, and I hope that it was helpful for you. So check out my website, stockkid.reasonersparadise.com, and my YouTube channel, youtube.com/thestockkid. See you there. Bye.